Hello, everybody. It's Abigail from Value for Trading here once again. As regards the FSI model, I have had people ask me questions of what the major difference between trading and investing is, and I've not really been able to give a definite answer as to what the major difference slash the similarities are between trading and investing.
Okay, so great question. For those of you who don't know, the FSI model stands for favor and branding, sales and marketing, investing and trading. And here at Value Flow, we see those as the pillars for growing wealth over time. So in singling out investing and trading, the first major difference between investing and trading is the amount of time that you intend to hold on to that asset for. So an investor generally wants to purchase an asset and hold on to it for a relatively long period of time. Sometimes you can see them doing a year, 2 years, a decade. Sometimes children inherit the shares, the investments of their parents. That shows you how long that horizon is. Whereas when it comes to trading, we're looking at a much shorter investment period where you purchase an asset. I just want to take advantage of a quick price change, price appreciation. So that's the major difference. Typically, traders, when trading, hold on to an asset for price appreciation, capital gains. But investors sometimes, depending on the asset, may be holding on for dividend payments if they are buying shares, and for different other reasons. So they make money using different other means, dividend payouts, stock splits. But for trading, it's purely price differential, price appreciation. So that's the major difference. Now, the similarities, of course, both involve you carrying money from purchasing an asset in a risk-adjusted manner. So that's basically the difference.
Okay, so when it comes to trading now, we have the investment aspect of it, and that's having someone trade for you. And I have had someone trade for me as well, where I don't have to bear the risk and the emotional trauma or stress per se, right? I had someone do all the work and I had a share of the profits. Yeah. I also have copy trading as well. I've also heard about MAM. I don't know if you could share more light on what.
Okay, fantastic. So like you said, yes, trading sometimes can be psychologically demanding. Right. You need a certain level of skill and a certain amount of free time or flexible time to trade. Not everybody may have the skill or the time to trade. Like you said, you also trade, but I'm sure the time when you had someone trading for you, you probably didn't have time. Right. Exactly. And you still wanted to profit from the market. Right. So yes, what brokers now decided to do is, because they have a lot of people trading on their platform, they came up with this idea that if you believe you're a great trader and you trade very well, then your accounts can now become what we may call a master account, where other traders who may not have the time or the skill set like you can fund their accounts, and then your accounts will be joined or connected using technology. Now, the master trader cannot dip his hands into your funds. No, what happens is, if he takes a buy on the funds in his own master account, the technology will replicate that same buy signal on the copy trader's account, so that if he makes money, you also make money. If he makes a loss, same way you also make a loss. But the good thing about this is, you that are copying the master trader, you can set your own risk parameters and state how much of your own funds you wish to risk. So you're not doing the stress of analyzing and generating signals. You're not saddled with the stress of executing and managing trades. All you have to do is just preset your risk parameters. And typically at the end of the month, if there's money made on the account, you split the profits with the trader. Now, some traders take 50-50, meaning they share the profits equally. Some take 40-60. It depends on the trader's competence and his own trading goals. Now, someone can ask, what about the losses? Well, he won't share losses with you, because you are supposed to predetermine the kind of risk exposure you want on your own account. So why is it a great situation? Well, it's a win for traders, master traders, because now they can share profits and their signals can generate profits on other people's accounts. So they have a larger amount to trade with and profit from. It's a win for the brokers because new traders who haven't gotten the skill set of the time can start earning immediately, shortening the turnaround time, converting someone from trader to profitable trader. And then it's a win for you, the investor, because now, without, like you said, the trauma and the stress and pressure of trading, you can still make money just copying selected traders. And it's you that selects, it's you that does the evaluation and decides, I like how this person is trading, connect my account to their own account. So yes, it's a win-win for all if you understand the risk management structure behind it.
Oh, that's amazing.
Yeah.
Like, you've been in this industry for over 15 years.
Yeah.
What is your golden rule? Do you have rules that has been able to guide you through, that has kept you in this business for this long? Because people come in every time.
Yeah.
That we've had people who say to them, I'm a trader, and then 6 months, 1 year down the line, we hear nothing anymore. So what has kept you this far in this business?
Great. I don't know if I can just narrow it down to just one thing. I'll do my best to do so. But I think, and this is a philosophy generally for everything I do, I really like to play the long-term game. And what I mean by that is anything I try to do, I'm not doing it for the immediate benefits or the immediate gratification. That's the word. I am rather looking at the big picture and what it can grow to become. So from the first day I started trading, of course, at first you want to make the quick profits, immediate profits. But then I realized this market is not going anywhere. Let me sit and learn. Secondly, I tried a lot as possible to study those who had gone ahead. I remember when I jumped into trading, after like 2-3 years, I started studying traders on LinkedIn, foreign, American, European traders, and I saw that this was a career. So I wasn't in it for the immediate profit. I was like, I want to pursue a career in this. As such, I tried to minimize my risks. I didn't bet it all on the bank. I'm not counting on one trade to change my story. I'm counting on series of trades after trades, month after month, year after year to keep me going. So I never risked everything in one go. I really try not to do that because I have the idea that this is a career and not just a hobby or a pastime. So I think that has really helped. And then lastly is encouraging myself by seeing what other people out there are doing. Sometimes trading can be lonely and very discouraging. But if you keep looking at the inspirational stories of those who have succeeded, it inspires you to give it one more chance, one more shot. And not just looking at inspiration. If you see that they know something you don't know, you reach out, you engage, either through paying for courses or just try to build rapport so they can share their insights with you. So in summary, playing a long-term game, not betting everything at once on one trade, and networking and collaborating with other traders has played a significant role to getting me to where I am today, and will play an even more significant role in getting me to where I want to be in the years to come. Exactly.
You've all heard it. If you're a new trader, you're going into trading, you've heard it. Practice delayed gratification, learn risk, and also learn to network with other people who have been in this industry years before you. Learn. Thank you so much, sir.
Thanks, Abigail, for having me.
All right. See you guys next time.